Hello, Forex traders. I hope you're all doing well. Today is the 25th of June 2025. I'm here with another good video to help you become a better trader. This is the US dollar against the Swedish krona 4-hour time frame. If you've not seen my previous video, welcome to my channel. And the first thing I do each time I open a chart, it doesn't matter what time frame I'm looking at. Anytime from Sator is the same process, the same principle that I apply. So the first thing I do is I identify my trend. So on this 4-hour time frame, this was a clear downtrend. Yeah. So if the chart that you're looking at is downtrending, then you need to wait for a consolidation at the bottom of the trend. Like I said, it doesn't matter what time frame you're looking at. Yeah, this applies on all time frames. If the trend is down, do nothing until you see a consolidation at the bottom of the trend. If the chart you're looking at is uptrending, so we're making our higher highs and higher lows, do nothing and wait until you see a consolidation at the top of the trend. And then that is when you start showing interest. Start looking at the chart closely and just watch this video and my other videos, and you will see how I trade using this methodology. Okay, it is straightforward, simple, and easy to understand. I'll show you that this is how to make money trading the forex market or any other financial instrument. Okay, it is very difficult to make money trading forex or any other financial market. If you don't apply this principle that I'm going to show you, then you will continue to blow your accounts. All right, so we've identified the consolidation at this bottom of the trend. So a consolidation because the market went sideways as we approached this level. We started bouncing to the upside. Yeah, we came back. We kept rejecting the level. Um, we came back again. We rejected this level before we eventually the broke this level. So since 21st of April 2025, we have not had a close below the level, not until 12th of June 2025. So 2 months later, we had this break and close. So if you were looking at this candle here on Thursday, the 12th of June, if you were looking at this candle live, what would you have done? I'm sure most traders would have gone short after they close, after this big red candle close. Most traders would have gone short because for 2 months we've not traded below this level. We've just had bounces up off this consolidation area. Yeah, okay, we've just been buying and buying and buying, and then we eventually closed below. So if you had gone long here, yeah, if you had gone long here, right there, after this pin bar candle, if you had gone long here, your stops are gonna be below this level, and your take profit will be somewhere above this above this high. Yeah, that's where you're gonna be targeting to take your profit. Yeah, so market went up and then did not get to that high. Okay, so this is the first sign that you look for. So we did not get to that high, so it is assumed that people that have gone long here, you can see these bullish candles going up. Yeah, bullish candles closing above each candle. So it is assumed that you are still holding on, you are still holding on to your trade if you took this long. Yeah, The worst case scenario would be that you would go take break even trade. Yeah. So we take break even, but most traders are still gonna hold on to that trade, believing that this pullback here will be a retest of this level before it bounce up again. Okay, but then what happened was this red candle did two jobs. The first job was to stop hunt every trader that have gone long here, sorry, long here, or even long here. Yeah, because if they've gone long here also, they are holding on to that high there. Yeah. So if you've gone long here or long there, it is assumed that you were still holding on to your trade and your stops were taken out by this bearish engulfing candle. So that's the first thing it did. The second thing that this candle did was act as a breakout candle. Okay. So for breakout traders, this is where they would jump in and take a sell trade to the downside. If they take a sell trade, where would the stop loss be? The stops are going to be above um, this zone here, or even above that candle high, depending on how big that account is. But I doubt if you have a huge account, and it would be stupid of you um, to put your stop loss above this high, because um, that is too risky of a trade to take. Yeah. But people do it. So I'm not saying that people don't do it. People do it, but you know, that is very risky. All right, because that's a lot of pips to risk, because you're gonna take the trade here. So let's do an example. So market closed, you took a short, you put your stops or above this. Let's say put it there. Yeah. Okay. That is a lot of pips to risk. Yeah. That is a lot of money to risk. So I'll delete that because I don't trade like that. So I'm using the replay mode. So we just go candle by candle, and then I'll teach you how not to trade. All right. So they've gone short, um, and then I'm gonna be a little bit fast. Okay. So now the retracement traders are gonna be hanging on around this area to take a sell trade. Yeah. So breakout traders have gone short. Retracement traders are hoping to get a retracement or a candlestick signal around here for them to go short. All right. So let's play the next candle. Okay. Now this rejection of the level did two things. The first thing is it acted as a stop grab, yeah, a stop grabber of the people that have taken this short trade. So if your stops were above this high here, you were taken out. If your stop is above this high here, you are still in the trade. All right. So this candle has done two things. It's taken out the stops, and then it's acting as a rejection candle. Yeah. So now sellers are going to come into the market. The retracement traders are going to come into the market, and the stops are all going to be above this high here or even above that high here. All right. So the first thing, remember, the first thing has been done. Yeah. Breakout traders are all taken out. Yeah. So the first stop loss is taken. All right. So let's go. Okay. Now we had this bearish candle. Sorry, I went one fast. We had this bullish candle. So this bullish candle, what is done now is to get people to come into the market, buyers that is. So we've got people coming in saying, okay, so we've broke back above the level and closed with a bullish candle. Yeah. Therefore, we are gonna go long. Yeah. So this candle is a confirmation that we've broke back to the upside, and they are gonna go long. Yeah. All right. So we assume that buyers have come into the market. But this candle has also, what this candle has also done is a stop of anybody holding the anybody have taken short that are stops are above this high here. So this candle has done a job taking them out, and then also acted as a bullish breakout. Yeah, a breakout candle to the upside. Yeah, and then the next candle was then a bearish engulfing candle. Yeah, um, and then sellers will come into the market if they get the next bearish confirmation candle. So let's see what happened. So the next candle was a pin bar. Yeah, a pin bar candle. What does a pin bar say? A pin bar is a candle that signifies that sellers have come into the market. Yeah, so this was a confirmation candle for sellers to come into the market. Yeah, so most traders will argue that this here was a retracement of this breakdown. Yeah, of this push down. This was a retracement, and then this gave them the confirmation that this is now a candle to continue pushing to the downside. Yeah, so this is how we retail traders read the market, but we read the market the wrong way. All right, so let's see what happened the next candle. Okay, so the next candle is now a bullish candle. Yeah, I'm sure people will read these two candles as a bearish candle, and then once we do not have a break above this red candle, this candle will be assumed to be a retracement of these two red candles. Okay, again, this is how we were taught to read the candlesticks. All right, so the next candle was some sort of dodgy candle. Not quite sure if it was moving up or moving down because it closed near to the opening of the previous 4-hour candle, right? So this is assumed to be dodgy candle, not sure. So any red candle after this candle will be a suggestion for sellers to come into the market as a confirmation that this was a pullback or a retracement of these two red candles. Why? Because we did not close above this red candle. So exactly, we got that bearish engulfing candle, yeah, with a big, massive red candle close to the bottom. All right. So this is where sellers will come into the market now, and other stops are going to be above this high right there. Okay, stops are going to be above this high. All right. So when all this drama is happening, yeah, we stay away. We know we want to go short, yeah, but we do not go short here. We do not go short anywhere around here because we know that this is just the market working, the banks or whoever moves the market working this area, yeah, inducing and seducing and attracting longs and shorts in the market. Yeah. So meanwhile, when we've seen this leg here, this is when we need to identify a supply zone where to go short. Why? Because we know that the market has broken to the downside. We know exactly what is happening around this area. This is why we don't take our trades here. Okay. So making money in forex market is so difficult because we were taught how to read the market the wrong way. Okay, and I'm showing you how to read it correctly um, to avoid blowing your account. Okay, so we do not sell or buy around this area. Yeah, we want to go short. So all we do is look for a supply zone. So we broke down. So from here, I'm just going to zoom the chart for you. All you do is look for a supply zone. Can you see a good supply area? I cannot find any supply zone. I cannot see any rally based drop or a drop based drop. That's the two supply zones that we have. I could not see any candle, any zones here. So all I do is I'll continue going to the upside because I want to sell. I do not want to buy, and I do not want to sell anywhere below here. I want to sell, you know, I want to sell high. Yeah, I want to sell very, very high. because that's how we make profits. You say high, you buy low. All right. So looking up to the left, and this is where I have identified a supply zone, but this supply zone has been used, so it's not fresh. Yeah, so I will go up and look for a fresh zone, and this is where I found my fresh supply zone. So what I done was I looked from the current price to the upside to the left. I'm looking for a supply zone. Two supply zones are rally base drop and drop base drop. I cannot see any supply zone. Yeah, the nearest supply zone I saw was that one, this rally base drop, but this supply zone is not fresh because this candle here, this push down here, and that push down here came from the supply zone. So I'm not going to take the supply zone. I need a supply zone that has not done nothing, has not been used. And this is the supply zone here. So we had this rally here, we had this base here, we had this drop here. So this is a supply zone that I will plot. So this is, I'll just plot the supply zone, and then what I do is I will then wait. Yeah, I would then, so if you look at the red line, you can clearly see that this push up here did not touch the red line. So this is a fresh supply zone. Yeah, so this is, I'll just plot this zone, and then I'll wait for this market to come back to this zone, excuse me, before I take a sell trade. So remember, we're pushing downtrend, so I want to go short as well with the banks. I don't want to go short before the right time. All right, so let's continue playing. This time I'm going to be fast because I don't want the video to be too long. Yeah, so what they did was they kept working this area. I just zoomed that for you. Yeah, they kept working this area, kept inducing and seducing people to go short and go long. Yeah, all right, so we had a breakout now, and we had this retest there. So more buyers have come into the market. Yeah, okay, so we're pushing up. Okay, so we kept pushing up. Okay, so let me explain what happened here. So we pushed up, we had this bearish engulfing candle. Yeah, bearish engulfing candle, and this would then get sellers to come into the market. We retraced back, we did not close above the level. We had this red engulfing candle to the downside. We broke below it, we got more sellers in the market. Where would the stop loss be? The stops are going to be above the pin bar. Yeah, and what is above the pin bar? You had the supply zone right there. Okay, so you see how hard it is to make money, and the candlestick patterns that they teach you does not work on their own, yeah, by themselves. So you need a confluence to use those candlesticks pattern. Okay, so then we broke bullish, yeah, and then had this another pin back candle. So if your short is above this pin back candle, you're still in the trade, yeah. And what is this? This is double top, right? This is double top. So another bearish candle or another close below this bearish candle here will give you a confirmation of the give you confirmation to go short. Okay, yeah, so we had a close below that red candle, so I'm sure people have come in to take the short trade, but then the next candle um, went above it. All right, okay, so we are approaching our supply zone. Okay, so as you can see, um, the market came into supply zone. Yeah, it touched it and then we dropped. Okay, so this is where I take my trade. So I take my trade at the start of the supply zone right there. Yeah, my stops goes above the supply zone. Yeah, and then I aim for either 2 to 1 or 3 to 1 depending on the candlesticks. before the zone. So if I have a demand zone, for example, that I believe um, may prevent my trade going down, then I'll aim for 2 to 1. Yeah. But in most case scenarios, the price breaks this low. Yeah, because there are still stops hanging below this low. The market will break below this low and close below that low there. Yeah. So so what I tend to do is I aim for 3 to 1, or I aim for that low there. Yeah. So that is how I trade using um, this methodology. All right. So this is it. This is where the market is at present time. All right. So yeah. So this is how I trade. I can give you examples of what I'm looking for, and also for you to keep an eye on that. So I'll give you a quick trade idea. Euro GBP um, on the daily time frame. So as you can see, we had this consolidation right there, and then we broke above the level. And then, breakout traders have gone long. Stops are going to be below that level, and this is a demand zone I'm looking to go long. Yeah. Um, yeah. So this is basically how I trade. Yeah. So that's one that I'm looking to take. There's CAD JPY also on a 4-hour time frame that I'm looking to take a long trade if market comes back to this demand zone. Yeah. So we're pushing up, and then we had this rejection of the level. We broke out, came back down, did not quite get to the demand zone. We broke back out again. We closed, and if I see a price returning to demand zone, I'll take a long trade. All right. I'll look to take a long trade rather. So this is how not to trade. If you trade a breakout, for example, this breakout, where is my tool? So if you had gone long after this breakout, you were taken out, and if taking this long, you were taken out. Yeah. So you want to go with the trend, but you don't want to take a long trade before the time. So you need to wait for all this drama to occur. Yeah. Before taking your trades. I can show you examples of the trades that I have taken. Just just for you to yeah. So I took this trade here. Yeah. So this was a trade I took. So we had market was pushing to the upside. And then we had this consolidation here. And then we broke to the upside. When we broke to the upside, buyers came into the market. Do not take breakouts. Okay, do not trade breakouts because it is a trap. So buyers came into the market, we retraced, more buyers came into the market, and then all the stops are all going to be below this level. This big bearish candle came, took them out, and then more sellers come into the market because of the bearish engulfing candle close. Sellers come into the market, what would the stop loss be? Oh, they're all going to be above this level, right? They're all going to be above this level. Sorry, I need to get 1 second. I need to plug my charger. Okay, so where were we? Right, so yeah, so then breakouts, it broke out with this engulfing candle. Stops are all going to be above the high there. And this is because the market is trending to the upside. We want to go long. So once we had this first breakout, this is when we look for the demand zones, all right, to take our trade. Well, this is a demand zone, but because this is very close to the zone, we assume that the buyers here will hide their stops below this low there. So what we'll do is we identify a demand zone below that this first demand zone right there, which was this one. So when market came down, yeah, this is when we went long. Yeah, we went long, and then yeah, that's it. Profit was hit. Okay, so you went long, stops below the low of the demand zone, and then you target 3 to 1. All right. Okay, so let's not make this video too long. I can show you many examples of of how I trade. All right, so let's not make this video too long. I hope this makes sense. Any questions? Yeah, ask. Take care now. Bye bye.